Hi friends, my name is Vinod Kumar Agarwal and I'm going to tell you about our social media platform where you can subscribe, like, share and you'll get a lot of video updates. Our YouTube channel is AS Foundation Pune, our Instagram channel is AS Foundation, our WhatsApp number is 9766921860, our Facebook page is AS Foundation Pune. So please subscribe, like, share with your friends and get a lot of free videos and updates. Please visit our website asfoundation.co.in where you will find all great faculties in our countries. They are selling our products on our portal and you can get a lot of free discounts, gifts and purchase from our website asfoundation.co.in. Thank you for watching this video. All the best.
Yes, very good morning. So how are all of you? Good, right? How many of you are writing your exams under the old course? Okay, I think majority of you, and rest of you under the new course. Okay, all of you writing your exams in May? November, you don't know. Okay. I think let's leave it to ICAI to decide. Rather give them less of an opportunity so that you know that you write an exam again in November. Okay, right, so it's going to be a 6 days batch. Yes, we are going to cover the entire CA final audit. We have more time. Generally, I take 3 days. This is a 6-day batch. So relatively more in detail, I'll be able to cover the entire syllabus. Right, material, they'll be giving you some revision notes. Apart from that, I'm very sure that in the month of March, you already might be having some book from which you are studying. And you might be having some notes, some material, some author book, some class which you might have already done. Kuch to notes already hoga tumhare paas. So whatever material you have with you, that you can continue to use. No problem at all, right? So whatever material you have. In the class, I'll be preparing some charts, so you can also copy down, keep on writing with me, so that it's a revision. And this class is probably that booster, or probably a opportunity for you to identify what all were the mistakes committed, where all we went wrong, you know, where all we can cover up. कि क्या क्या गलती हो रही है, क्या क्या उसमें सुधार, क्या improvement हो सकती है, right? That's the main purpose. Okay, I hope everyone is comfortable with English. Okay, you want me to speak in Hindi? No, I think it is not. Anybody? You want me? I can speak in Hindi also. I can conduct more than 70% or 60% of the batch in Hindi also. But given an option, I will not prefer that. Why? Because in audit, no, your programming of the brain for the audit subject, the programming of your brain has to be in English language. You understand now that terminology, something. So again, from my experience, I'm telling you that sometimes in the beginning of the class, students have a negative notion. You know, they say that, no, she's speaking too much in English. That is what they tell their friends in the break. Okay, pura English mein hi padha rahi hai. Aise they will tell. But I'm telling you, you have trust in me. Anyways, you know, you have no option. So, so you better have trust in me. That it is going to be helpful, that I am going to make a very good effort, you know, of telling you, of teaching you the subject of audit. Okay, so in case you don't understand anything, you want me to revise something again, all that you let me know. Okay, but don't tell anything to your friend, okay, because your friend anyways can't help you. Okay, you tell your friend, then what he will tell you, abhi kya kare hai, aisa hi hai. So, you know, you better come and tell me whatever is your concern. Okay, right. So today we started a bit late, but tomorrow I will start on time, absolutely on time as the decided time. And then what else do you want me to tell? So every day our session, we will divide it under 3 parts, okay? In the morning part, every day we will do standards, right? Every day in the morning we will do the standards. Then every afternoon we will do some clauses. Like 2 days, today, tomorrow we'll do ethics clauses. Then day after we'll do the caro clauses. And day to day after we'll do the caro clauses. Then after that we'll do the tax audit clauses, right? The form 3CD. And then after that we'll do the GST audit, which has come in the RTP, no? Right? The GSTR 9C. So that also we will discuss. And then in the third part, so morning standards, then afternoon a few clauses. And then in the last session, the bank, insurance, bank audits, insurance company audit, NBFC, public sector undertakings, right? We have so much to study. Audit of consolidated financial statements, liabilities of the auditor, special audit assignments, right? So much to cover over there. Right. One important mistake which you might have committed so far in your preparation for the audit subject is that you might have gone for selective study. Right? You don't even know what is there in the chapter of public sector undertakings. You understand? No? Or, consolidated financial statements. You've seen every exam there is a case study which comes from that chapter. Generally, every exam there is a case study which comes. And again, you don't know the answers. You understand? From bank, again, every exam we generally see one question, right? From the chapter of banks, we generally see one question in every exams. Okay, so that is why, again, it's preferable, given an option, you should not leave anything in option. Means it is not recommended to leave anything in option because of the format of the paper. Question number 3, A, B, C, D. Question number 4, A, B, C, D. Okay, and that A, B, C, D, what happens? Like just as an example, question number 3A, say, could be on the standards. Question, and now ethics also, what they have started doing earlier, generally what is expected, ethics, all 4 questions in one question. So in that case, what we consider, this one ethics answer, I will pakka write. You understand? No, that is the counting which you do and go into the exam hall. What happens? Every exam there is every question there is one question on ethics over there. Question number 3, one question on ethics. Question number 4, one question on ethics. 5, one question on ethics. And 6, one question on ethics. Now, if you want to write all those 4 questions on ethics, you will have to write down all question number 3, 4, 5, 6. So that becomes very difficult. It's not a good deal, कि एक क्वेश्चन लिखने के चक्कर में 3 और लिखने पड़ रहे हैं. And just because you know ethics, then you have to write the other 3 also, no? Right. Then say C, question number 3C is say on caro, and 4th one is say on the bank audits. Okay. Now, here is where the problem comes in the exams, where if you know the answer on essay and ethics, now compulsorily you have to write the answer on caro and bank also. Right, so that is why it is not recommended. Students become a chartered accountant very quickly if they stop leaving things in option. You understand? Your life from a student to a professional will be quicker, it might happen in May itself if you don't leave anything in option. So that's one very important point. Another important lot of air, about MCQ. Okay, multiple choice questions. What institute earlier issued in the sample questionnaires, the sample MCQ, those were very simple. Damn simple, no? Then what they issued in the RTP were very difficult. You understand, RTP, they've made like case studies. Now, reading that question is going to take us like, 3-4 minutes. So if you look at the RTP, different variety of questions. Sample, different variety of question. There is no end to the number of MCQs one can study before entering into the exam hall. It's an open-ended preparation. But again, I would suggest that one MCQ requires conceptual clarity. Second, I'm then telling you at the beginning of the class in the first 5 minutes itself, that for MCQ, what is highly recommended now is that you also go through the ICAI module, which I used to never recommend before in any of my classes. I used to say whatever is our book of audit for 3 times before the exam, that's more than enough, and that holds good even now. But now MCQ, they are going to dig into the nooks and corners of the books. And the advantage of MCQ is that you should only know the concept. You should only know what technically it is. There is no need for you to know it in order to write an answer of 4 marks. You should just know what is the concept, how it is to be applied. So it is recommended that you scan through. I don't want you to study through the module as such. But going, like somewhere there is a percentage given, say some 5%. Or somewhere it is given central government, or it is allowed by RBI. Now, these are the points which can come in MCQ, like 5% or central government, RBI. See, Just imagine the situation of the contestant who has to give an answer in Kaun Banega Karodpati. You know, when a 25 lakh, 50 lakh rupee question is asked and a 50 lakh, 1 crore question is asked to him, there are 4 options in front of him. That something which happened in Mahabharata, or something which happened in Ramayana, or in some 1980 Cricket World Cup. If you've ever seen Kaun Banega Karodpati, there is some World Cup question, you know, that which was the first fellow to have a century, or who got this award and that award. And now the contestant, when he gives the answer out of the 4, already you have 4 options over there, that who won this award, who won that award. Those are the type of question. Then what he says, the contestant, I remember reading somewhere. You understand, the contestant he says, ना मुझे ऐसे याद आ रहा है कि मैंने कहीं पढ़ा है कि ये इन्होंने किया था, या ये इनको ये award मिला था, या ये इस उम्र, at this age, at this year it had happened. Do you understand? And then Amitabh Bachchan keeps on asking, are you sure? या आपके पास अभी भी 2 lifeline है, आपके पास तो कोई lifeline नहीं है. But, you know, Amitabh Bachchan keeps on saying, na, are you sure? You know, because when Amitabh Bachchan itself knows that probably this is wrong, he tells more, you know, that use a lifeline. But otherwise he is like, yes, you are at the correct answer, you click. And then after the contestant gives the answer and it turns out to be the right answer, फिर Amitabh Bachchan again asks, तुम्हें ऐसे क्यों लग रहा था कि यही जवाब होगा? Then he gives the explanation, मैंने ऐसे कहीं सुना है. You understand? So with that, you know, when MCQ came, I remembered that few episodes of KBC which I had seen. So with that logic, I can tell you that you go through the module. Right, so going through module, obviously not studying, not comparing, okay, my book it is like this, here it is like this. No, here only wherever I see some new concept, wherever I see some new, what you say, knowledge. Okay, that is why. So that will give you an edge over the others for writing MCQ. See, even I have come up with a book for MCQ. It will be a surprise for me only if I see any question from my book in the exam paper. Because right now, we have just prepared the MCQ on the basis of the ICI material. So it's going to be a matter of sheer coincidence that whatever question of MCQs are there in our book have been asked by ICI in the exams. But obviously, we cannot say. At least from the theory book which we have, I can tell you with more guarantee, yes, that 50, 60, 70% questions can be same. But for MCQ, we cannot say that. Okay, so that is one for MCQ. It is my suggestion to you that you scan through the module. So those of you who have not even cut the ribbon of the module, you understand the module. At Inter, at least you are that sincere that you at least open that ribbon. You understand? You open to see what is it. At final, though, that bunch, you know, just lying with all the dust on it. Okay, so you may go through it. And one concluding remark for MCQ, and then we will begin to discuss that even though if MCQ is introduced for 30 marks, some questions are going to be for 1 mark, some questions are going to be for 2 marks. So it looks like out of MCQ, if I get 30, at least I get 20 marks. In a MCQ, students are going to do a lot of silly mistakes. That is one more thing which I can look forward. In A, B, that always that confusion is going to happen in the exam hall. CPT would have written, no, MCQ questions. So you think, oh my God, everything is coming A, not even a single B. And then you think, oh my God, there is all B, C only. Then you think whether it is A, whether it is B, then you finally mark D only. So you see, they are fighting so much A and B, forget both of them. Let me mark D only. So that is one that you will do a lot of silly mistakes. So say on an average, if you get 30 out of 20 in the MCQs, and then later on from the other theory part, if you get some marks, so it looks like, you know, passing is going to become more easy, you know, the paper is going to be more objective. But I have a serious question in my mind, will the passing percentage of ICI increase with MCQ coming? It will not increase. So the fight is going to be the same, I think. It won't happen, no, that MCQ has come this time, that's my 55% result of CA course. Will it happen? Can you even dream of it? You can't even dream of it, no. I think 15 may increase to 17%. So I don't want to scare you, but I want to tell you the reality. Let's see, why MCQ? With the introduction of MCQ, if the passing percentage is increasing, then, you know, analytical, we can compare. But here, it doesn't look like so, that all of a sudden, because of MCQ, passing percentage will increase, no. So rather, I have an observation that now students failing instead of with 25 marks, now they will fail with 35 marks. The thing will be same, but only, you fail in a less miserable manner. That is how it could be put in that case. Okay, so instead of getting 25, now you get 35. Okay, something like that. Okay, but obviously all this is the negative part of the CA course, which I can tell you. But if you put in your best efforts, if you're very dedicated and sincere towards the preparation of your subject, okay, it's easy. It's easy to write the exams, but what is required is dedication, lots and lots and lots of hard work. Like, March, April, like now most probably for you guys, the attempt is going to go further. So it's like the peak time of preparation for the CA course, March, April, May. When you study right now for 14, 15 hours a day, you put in all your efforts, all possible work which you could do. Okay, certainly you can clear your exams. Okay, so that is about the beginning of the class. Right, with that, let me begin with, today in the first session, I'll be going a bit towards the basic concepts. Okay, so obviously going forward, I won't be going so much into basics and also not at such a slow speed. Right now, relatively, I will be a bit slow because, without the basic concepts, I cannot go further. I cannot go into the further, like some basic concepts which you already know since intermediate or IPCC, but a quick revision of those concepts required. Though at final level, a direct question may not be asked. Though at final level, from the basic concepts, a direct question may not be asked. But these basic concepts are required for writing the answers for the case studies. You understand, some content, some thinking style is required, no, for writing the case study answers. So for that, these basic concepts would be required. So that is why first I'll take today 200, which is the overall objectives, then 500 audit evidence, then the engagement letter and the audit report series. Right, so that is what I intend to cover right now. Okay, right. So all good for everyone? Right, all good? Right, so you've opened your notebook. You have any textbook with you? No textbook, you have a notebook? You've not got any notebook with you? A textbook with you? No textbooks you have? You've not yet started studying audit? You've started? Okay, you will get some revision notes over here. But then obviously as a student, you also prefer that whatever I've been already studying, I will also keep that with me. What you will get is okay, but then whatever you have with you, you will think, no, that okay, whatever I studied, I continue with the marking in that also. Right, so let's begin with, right, SE 200. Overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing. Right, overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing. Right, so what are the overall objectives of the auditor? Like when you're appointed for a statutory audit, what are the overall objectives of the auditor? To obtain a reasonable assurance, which is a high level of assurance, but not an absolute assurance. Right? Reasonable assurance is a high level of assurance, but not an absolute assurance due to the inherent limitations of an audit. One exam now recent past, May 18, November 18, they've started asking questions regarding difference between audit and review. 2000 series was never asked in the exams. If you look at the question bank, 2000 series was only there in the RTP. So as a student, when you study, you see, oh, 2000 series, no question asked. Okay, but May 18, November 18, they have asked distinguish between reasonable assurance engagement and the limited assurance engagement, or distinguish between an audit and a review. Right, so audit, what do we give? Reasonable assurance that financial statements are free from material misstatement, whether due to fraud or error. And review, we give a limited assurance. So this question which I am covering right now has been asked in your exams. Limited assurance. Right. In an audit, reasonable assurance is given in the form of a positive assurance. We say a sentence saying that financial statements give a true and fair view. Right? That the balance is according to the information explanation given to us and to the best of our knowledge and belief. the financial statements give a true and fair view. Right? In a review, we give limited assurance in the form of a negative assurance. In the form of a negative assurance. We say nothing has come to our attention that causes us to believe that the accompanying financial statements do not give a true and fair view. Nothing has come to our attention that causes us to believe that the financial statements do not give a true and fair view. Means what? Nothing has come to our attention that causes us to believe that the financial statements do not give a true and fair view. Means what? It gives a true and fair view. Nothing and do not. Minus, minus, plus. No, you know in algebra, no? Right? Minus, minus, plus. So what we are saying is true and fair. But limited assurance is required to be given in the form of a negative assurance. That is what the standards say. Right. While doing an audit, we follow these standards on auditing. While doing a review, we follow these standards on review engagement. Is it right? Right? What is more in scope, audit or review? Obviously, audit, right? Audit is going to be more in scope as compared to a review. Review is going to be less in scope as compared to an audit. In an audit, we have mainly 7 methods of obtaining audit evidence: inspection, confirmation, analytical procedures, inquiry, observation, recalculation, reperformance. In an audit, are you paying attention? We have mainly 7 methods of obtaining audit evidence, ICAIORR, what we study in SA 500. Inspection, confirmation, analytical procedures, inquiry, observation, recalculation and reperformance. Whereas in a review, mainly the procedures performed by the CA are inquiry and analytical procedures. Whereas in a review, mainly the procedures performed are inquiry and analytical procedures. So no confirmation, no inspection, no observation, recalculation, reperformance. It's only an overview. Right? So mainly the procedures performed in case of a review are inquiry and analytical procedures. So you know, when client prepares financial statements, say Geo Limited has prepared its financial statements and they are telling CA, please check these financial statements, issue a report. What CA says, I can do 2 types of checking. I can do audit or I can do a review. If I do audit, I will give you a positive assurance, reasonable assurance, fee will be 50 lakh rupees. And if I do a review, I will give you limited assurance in the form of a negative assurance and fee will be 15 lakh rupees. Okay, so then client can decide whether they want to get an audit done or whether they want to get a review done. Does everybody understand that? Okay, so now, you know, many a times listed entities, they have to get quarterly, they have to declare their quarterly results. So probably in the beginning, for them to get a quarterly audit done may not be practical, may not be feasible, economical also. So what they may do, they may go for quarterly reviews. Quarterly review, June, September, December review, and then March audit. Or you know, review can happen quickly. So the company wants to declare its results early. So what they can do, first declare the reviewed results and later on followed by the audited results. First declare the reviewed results and then declare the audited results. So this review is also called as LR. LR is what? Limited review. LR is what? Limited review. Right? So that is the distinguish between the audit and the review. So because I saw that reasonable assurance, I thought let me cover this point with you. Right? Audit and review. Do you understand the distinguish between the two? Audit, positive assurance, reasonable assurance. Review, negative assurance, limited assurance. In an audit, 7 methods, ICAIORR. In a review, mainly the procedures followed are inquiry and analytical procedures. Right? Mainly the procedures followed are inquiry and analytical procedures. Now, because I have come to review, let me also tell you that there are 2 standards on review engagement, 2400 and 2410. Engagements to review historical financial statements, that is 2400, and review of interim financial information performed by an independent auditor of the entity, that is 2410. So 2400 and then 2410. Right. When the person doing the audit and the person doing the review are different, say PwC is doing the audit and KPMG is doing the review. So KPMG needs to follow 2400. When the person doing the audit and review are different, then that reviewer, that CA, practicing CA needs to follow 2400. And when the person doing the audit, PwC, example, they themselves are also doing the review, say again PwC. In that case, PwC needs to follow 2410. What is the title of 2410? Review of interim financial information performed by an independent auditor of the entity. So when auditor is doing the review, 2410. When auditor is not doing the review, some another CA is doing the review, then 2400. I hope you understand. When auditor is doing review, 2410. And when auditor is not doing review, some another CA is doing the review, then 2400. Okay, that is just the first part of it. 2400 and 2410. What is the title of 2400? Engagements to review historical financial statements. And 2410, review of interim financial information performed by an independent auditor of the entity. So later on when I come to the 2000 series, we'll see it further. Is it okay for everyone? Right. In case if you are writing, which is recommended to some extent, that either you write or at least you do the markings. Either you write with me or you at least do the markings. Okay. Now, so it is recommended that you write, but writing you have to match with what I am writing. Okay, when I am not going to give you separate time for writing. Okay, so whenever I am writing, you may consider writing at that time. If you are not able to write at that time, it's okay. Writing is not important. You are not here that for everything which is written on the board has to be there in the books. No, not at all. Okay, so it has to go into the brain. Basically, audit is a subject which you need to understand. You understand? But obviously, if you tell me, madam, wait, I am copying the chart, then time will not permit me in this particular batch at least. Okay, to give you all the time. So whenever I am writing, if you find it important, you may either write it or you may mark it. Okay, right. So now again coming to the overall objective. What is the overall objective? To obtain a reasonable assurance that financial statements are free from material misstatements, whether due to fraud or error. Free from material misstatements. That is, there should be no material fraud or error in the financial statements, and the auditor needs to obtain a reasonable assurance about the same. Right? Reasonable assurance that financial statements are free from material misstatement, thereby enabling the auditor to express an opinion. Thereby enabling the auditor to express an opinion as to whether or not the financial statements have been prepared by the management in accordance with an applicable financial reporting framework. Very important term, AFRF, applicable financial reporting framework. And then to report what? The findings of the auditor in accordance with the standards on auditing. This is the overall objective of the auditor, to obtain a reasonable assurance, which is a high level of assurance but not an absolute assurance. Right? That the financial statements are free from material misstatement, whether due to fraud or error, thereby enabling the auditor to express an opinion, so that the auditor can express an opinion saying what? That whether or not the financial statements have been prepared by the management in accordance with an applicable financial reporting framework. And you know, applicable financial reporting framework, that is the framework. That is the laws and regulations. Are you paying attention? Applicable financial reporting framework, that is the framework, that is the laws and regulations which are to be followed by the management while preparing the financial statements. Example for an Indian company, the applicable financial reporting framework will be Indian Accounting Standards and Schedule 3. And for some companies, Accounting Standards Schedule 3. This is just an example of an applicable financial reporting framework. This is just an example of the applicable financial reporting framework. So now, as an auditor, you have to express an opinion whether or not the financial statements have been prepared by the management in accordance with the AFRF. So if they are prepared as per Indian Accounting Standards and Schedule 3, then Section 129 of the Companies Act says that you can express an opinion saying true and fair view. And then you have to report in accordance with the 700 series. Okay, now you might be thinking, where does this sentence come in the answer in the case studies? Okay, just giving you an example. Later on, we'll again go to that one. 240, no, fraud. The auditor's responsibilities relating to fraud in an audit of financial statements. Generally, in the exam, there is some question regarding fraud which is asked. Okay, now when there is a case study asked regarding fraud, we have to write down some content, regarding the fraud question. Right, so first, how do we start with the answer? That the primary responsibility for the prevention and detection of fraud and error rests with the management. What obviously prevention, detection of frauds and errors is the responsibility of the management. The objective of the auditor is to obtain a reasonable assurance that financial statements are free from material misstatement, whether due to fraud or error. So this is where you need to use that. That primary responsibilities of the management. What is the primary responsibility of the auditor? To obtain a reasonable assurance that financial statements are free from material misstatement, whether due to fraud or error. That is why auditor doing an audit, does it give a guarantee for detection of fraud and error? No guarantee for detection of fraud or error. Right, so this is how we need to use it further in our answers. Okay, so now reasonable assurance and AFRF. Right, so if an Indian company prepares financial statements as per Accounting Standards in Schedule 3, can you express an opinion saying true and fair? Can you express an opinion saying they give a true and fair view? Yes, because Accounting Standard Schedule 3 is what is given under Section 129 of the Companies Act. Is what is given under Section 129 of the Companies Act, that financial statements shall give a true and fair view if they are in compliance with AS or Ind AS, whatever is applicable, plus Schedule 3 to the Companies Act 2013. If an Indian company prepares its financial statements only as per accounting standards, can you express an opinion saying true and fair? Yes, if an Indian company prepares its financial statements as per accounting standards, can you express an opinion saying true and fair? No, because there is no Schedule 3. For true and fair, it has to be accounting standards plus Schedule 3. So, in this case, what phrase is used by the auditor to express an opinion? Prepared. Say for that matter, the financial statements are prepared as per German GAAP. For German GAAP under Indian company law, can you express an opinion saying true and fair? No. Again, you will express an opinion saying prepared. That whether these financial statements have been prepared by the management in accordance with German GAAP? Yes, they have been prepared. Are they true and fair? We don't know. Don't ask. Accounting Standard Schedule 3, they give true and fair view. But for German GAAP, Hong Kong GAAP, Australian GAAP, only AS, we cannot express an opinion saying true and fair. So how will we express an opinion? We will express an opinion saying prepared. So, Accounting Standard Schedule 3 is an example of a fair presentation framework. It is an example of a fair presentation framework. Whereas accounting standards, German GAAP, these are examples of the compliance framework. These are examples of the compliance framework. Right? Compliance framework. Right? Fair presentation framework where there is fair in the name. So true and fair view. And German GAAP, Hong Kong GAAP, accounting standard, then it is going to be compliance framework. And generally these compliance framework, like you're appointed to do the audit of financial statements prepared as per German GAAP. You're paying attention? You're appointed to do the audit of the financial statements prepared as per German GAAP. So obviously German GAAP is also an example of a special purpose framework. It is not a general purpose framework. Does every Indian company prepare financial statements as per German GAAP? No, every Indian company will not. See, because their holding company is in Germany, that is why they are preparing as per German GAAP. So the special purpose framework also comes in SA 800, special considerations, audits of financial statements prepared in accordance with special purpose framework. Right? Special considerations, audits of financial statements. Do you know the title of 800? Right? Special considerations, audits of financial statements prepared in accordance with the special purpose framework. Right? Okay. Right. So now coming further, then what does 200 say? That you need to comply with the ethical requirements including independence. What does 200 say? That auditor, you need to comply with the ethical requirements including independence. Yes. No, is it only AS? See, it doesn't matter which is the entity which you are auditing. It matters that what has been used by the management while preparing financial statements. The sole proprietor, has it prepared its financial statements as per accounting standards only? Then it is going to be compliance framework. The sole proprietor has prepared financial statements as per AS and Schedule 3, then it is going to be fair presentation. So then they won't. So in that case, we won't express an opinion saying true and fair. We will express an opinion saying prepare. So if they prepare voluntarily, because anyway sole proprietor, there is no audit required, as no financial statements to be prepared, except for if they exceed the tax audit limits. Okay, right. So mainly here we are talking in the context of a company audit. Okay, because I made a reference to section 129. So 129 of the Companies Act 2013. Okay. Now, ethical requirements including independence. Right? Ethical requirements, those being integrity. Right? Integrity. Okay, has a question been asked in CA final for this one? Yes. You understand? No, what is easy. And what is difficult is difficult. What is out of syllabus is out of syllabus. But what is in syllabus, that we make it difficult because we consider it's too simple. ये final में नहीं आता है. Who told you this? ये final में नहीं आता है. The moment you decide and go, कि ये final में नहीं आता है, your attempt specially reserved. They will ask a question on this one. Right? They will ask a, बाद में दे देना. नहीं मैं break में ले लूँगी. हाँ. नहीं ठीक है बाद में देना. Okay, right. So there is nothing like that. And now this question in ethics, right? This question was asked under ethics, you know, okay, what are the fundamental or what are the prerequisites to be followed by a professional accountant? So what are those? Integrity, done? Okay, right. So integrity, objectivity. Right. Then professional competence and due care. Right. Professional competence and due care. Then confidentiality. Right. Then confidentiality. And then after that you have the professional behavior. Right. So, you know, the discussion regarding ethical requirements also comes in, it comes in SA 200. It comes in professional ethics and it also comes in SQC 1. And it also comes in SQC 1. Right? So, integrity, straightforward, honest and sincere while performing his professional services. Objectivity, there is no partiality, there is no bias, there is no subjectivity overriding the decision making. Yes, he is objective in decision making. Right? He has the competence, the requisite training, and he also performs his work with great skill, care, and caution. That is due care. Confidentiality, not to disclose the secrets of the client unless required by law or taken prior consent of the client. And professional behavior, to avoid any such behavior which might bring discredit to the profession. Right? Which might bring disrepute to the profession. Right? So these are the ethical requirements: integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. And independence, it says independence not only in appearance, but also independence of mind. And the auditor needs to check whether there are any threats to the independence. Okay, threats is a very upcoming concept. They are asking questions on this one. Right, threats to independence. So, title of audit report is also what? Independent auditor's report. So now you need to check whether there are any threats to the independence of the auditor. Whether there are any threats to the independence of the auditor. Okay. Now, in the classroom, I use 4 markings. One marking which I use is R raised to 10, which is read, revise 10 times before the exam. Right? 10 literally means 10. Okay? It's like every time you read it once, you write one number over there. Right? So, likewise, you have to keep a track. Have you read it 10 times before the exam? Right. So, this is something which has not yet been asked and which is a possibility that it could be asked. Second marking, R raised to 50, which is what? Again, not yet asked, a high probability of it being asked in the exam. Say mainly when there is some amendment or which is one area where everything has been asked, ye itna hi reh gaya hai. So again, you can make a guess. No, when everything has been asked and only so much is left, that could be asked. Right? So R raised to 10, R raised to 50, then ATF, that is all-time favorite, which has already been asked. R raised to 10 is what? What is yet to be asked. And ATF is what? What has already been asked, and there is a possibility that the question could be repeated. And the fourth one, ATF top 10. So which has already been asked and it has been asked many times. Like, SA 505, management's refusal to allow the auditor to send a confirmation request. And then the management is telling auditor not to send a confirmation request to a group of creditors or a group of debtors. Right, so that question has been asked so many times in the exam. So that is going to be ATF top 10. Okay, so these are 4 markings which we are going to use in the class. Okay, sometimes it should have been ATF, it becomes R raised to 10, or R raised to 10 becomes ATF. But we know the concept of substance over form. When we understand that there is any such marking over there, it means that this question is very important. Simple, what does it mean? That this question is very important. I need to study it well before the exams. Okay, so obviously, if a question is asked from any of the markings which I do, it's your luck. You understand? But many a times it is observed that whatever markings we do, on the basis of analysis, that you study it better, it helps you. That does not mean that you study only that. Okay, but obviously put more focus or study it more properly. Right, so independence, R raised to 10, you need to check whether there are any threats to the independence of the auditor. Right, to check whether there are any threats to the independence of the auditor. And to the threats to the independence of the auditor have been divided under 5 types of threats. The threats to the independence of the auditor have been divided under 5 types of threats. One, the familiarity threat. One is the familiarity threat. Second one, the self-interest threats. Third one, the self-review threats. Fourth one, the advocacy threats. And fifth one is the intimidation threats. Right? Fifth one is the intimidation threats. Right? Threats to the independence of the auditor, FSSAI. Right? Food Safety Standards Authority of India, no? Right? FSSAI. Familiarity threats, self-interest threats, self-review threats, advocacy threats, and intimidation threat. One exam, what question did they ask? Distinguish between self-interest threats and self-review threats. When you look at that question in the exam, it comes to your mind, option. You remember कि ये तो मैंने option में छोड़ा था और अभी exam में आ गया है. And ऊपर से they are not even asking wholesale. Huh? Wholesale is what? Discuss the various types of threats to the independence of the auditor as mentioned in the Code of Ethics. So then you can write, familiarity 1 line, self-interest threats 1.5 line, self-review threats 1 line, then advocacy threats 2 lines, and intimidation threat again 1 line. So somehow you manage to fill that 1 page. But now when they are asking you only self-interest threats and self-review threats for 4 marks, you have to write more in detail about each one of them. Right, so they've asked self-interest and self-review already. So there's one possibility that the same question could be repeated, or another possibility now they'll pick up the others. Okay, right. Familiarity threat. What is familiarity threat? It says when you are very closely associated, long association with the client for a very long time. Right? Long association for a very extended time. So this, and this familiarity threat has now been taken care of in company law by introducing the concept of rotation of company auditor. Okay, right? So long association. Then relatives of the CA are working in at the client place. Obviously, it's going to be a familiarity threat. Accepting gifts and hospitality from the client is certainly an example of familiarity threat. Are you allowed to accept gifts from the client? No. Any hospitality from the client? No. Why? Because it becomes familiarity threat. You understand? Next one. What is the next one? Self-interest threats. Right. Say the total receipts of your CA firm are 1 crore. You are a CA in practice, and what are the total receipts of your firm? 1 crore. Out of that, 85 lakh is coming from this one client. So 15 lakh, what fee is coming from all other certification and a small, the chota mota kaam se. And this one client, total billing of yours for that one client is 85 lakh. So if you lose this one client, directly the revenue of your firm will come down from 1 crore to 15 lakh. So you're overly dependent on that client for your fees. So it's your self-interest. You're dependent on the client, and also you have a fear of losing the client. So client says, auditor, if you don't issue unmodified opinion, we will remove you as the auditor. We will appoint another firm. What you'll say, no problem. We will issue unmodified. Please don't remove us. Why? Self-interest threat, no? Right? There is a self-interest threat. Self-review threats, you are doing some other accounting. Say you're writing the books of account of the client. In ethics, there is something called a substantial interest, no? If you are having substantial interest, can you express an opinion on financial statements? No. You understand? In company law, there is section 144, auditor not to render certain services. Is that a new list which has been introduced? Was it there in old company law? No. Right? So you are only doing accounting, bookkeeping. Do you know the list of services under section 144? Section 144, auditor not to render certain services, accounting and bookkeeping, internal audit, design and implementation of financial information system, outsourced financial services, investment advisory services, investment banking services, actuarial services, management services, and any other kind of services as may be prescribed. So if these 9 services, any of these 9 services are provided by the chartered accountant, he is disqualified to be appointed as an auditor of the company under 141(3)(I). He is disqualified to be appointed. So self-review, that means say you're writing the books of account of the client. Right? You are writing the books of account of the client. Right? You've helped. Can you do internal audit? If you're a statutory auditor? No. You're doing internal audit. You're doing some internal control work for the client. That means you are only doing some review work. You have only helped the client in design and implementation. Now can you help them check the maintenance or operating effectiveness? No. That's going to be a self-review threats. Maker checker has to be different. That is what it says. Advocacy threats, what does it say? You're promoting the shares of the client. You're promoting the shares of a listed entity. Or you are handling some litigations on behalf of the client. Right? Or you are handling some litigations on behalf of the client. Obviously, that's an advocacy threat. And intimidation means what? Pressure. What is the literal meaning of the word intimidation? It means pressure. Okay. So intimidation threats, what does it say? One, you've been threatened. The client has threatened that you will, that they are going to remove you. Threatened for removal, that the OCA is going to be removed from the assignment. There is lot of pressure being put on the auditor. Or he has been threatened to reduce the quantum of the work with a proportionate reduction in the fees also. He's been threatened. He's been told, okay, you reduce your work. We will reduce your fees also. Yes, we are going to reduce your fees, so now you reduce your work also. So that's intimidation threats. Right, so recommended for you that when you study the threats to independence of the auditor, please spend more time with the concept as it is R raised to 10. Threats to the independence of the auditor. What are the different types of threats to the independence of the auditor? Familiarity threat, self-interest threats, self-review threats, advocacy threats, and the intimidation threats. Okay. Right. Then after that, that, yes. See, self-interest is from the auditor side and intimidation is from the client side. Self-interest is from the auditor side. I am trying to be more particular. And intimidation, obviously the pressure or the threatening comes from the client side. Right. So now we come to the next concept of SA 200, which says that auditor, throughout the course of audit, you need to maintain an attitude of professional skepticism. Right? Professional skepticism. Again, this is required, in Caro answers. Yes, when you have to write down Caro answers, when you have to write down case study answers, you have to keep on using this word, that the auditor should maintain an attitude of professional skepticism throughout the audit. An attitude that includes a questioning mind, being alert to conditions which may indicate a possible misstatement due to error or fraud, and a critical assessment of audit evidence. Right? So very important for the auditor to maintain an attitude of professional skepticism, not to accept anything blindly, right, throughout the audit. Then throughout the course of audit, auditor, you also need to exercise professional judgment, right? Professional judgment throughout the audit. So wherever in an audit you have to take a decision, that is judgment, professional judgment. It says there has to be some logic behind your decision. That is professional judgment. Where in an audit do you need to take a decision? When you need to determine materiality, audit risk, audit evidence, audit procedure, what type of opinion to be issued. Everything is a decision, no? Nature, timing and extent of audit procedures is also a decision. So throughout the course of audit, you need to make decision. So now, you have taken materiality 30 crore. If somebody asks you, auditor, what basis have you taken materiality 30 crore? So auditor says, no, randomly I took 30 crore. Then it is only a judgment. It is not a professional judgment. But if auditor gives the explanation, that see, this is the logic I have applied and this is how I have derived materiality to be 30 crore, then that is professional judgment. Right? So professional judgment to be exercised by the auditor again throughout the audit. Then auditor needs to obtain the sufficient appropriate audit evidence, SAAE. Right? Again important, no? This is all terminology regarding audit. It will come in so many answers. You understand? We take it for granted. Okay, so sufficient appropriate audit evidence. Yes, the auditor shall obtain. Many of these standards, how does the objectives of these standards start? To obtain a sufficient appropriate audit evidence. Sufficiency refers to the quantity, appropriateness refers to the quality. Right? Sufficiency refers to the quantity of the audit evidence and appropriateness refers to the quality of the audit evidence. It is quantity and quality, sufficient and appropriate audit evidence. So very important, attitude of professional skepticism, exercise professional judgment, obtain sufficient appropriate audit evidence. Is it clear to everyone? Right. And now I come to the most important term of SA 200, which is audit risk. Okay, and this is the main reason why I am discussing SA 200 with you, audit risk. Are questions asked from risk in the exam? Certainly yes. Right, audit risk. Okay, in case of Satyam, way back now, 2009, okay, in case of Satyam Computer Services Limited, when the fraud was committed, did their auditor express an opinion on their financial statement saying true and fair? Yes. Their auditor had always expressed an opinion saying true and fair. And what was the reality? There was a 7,000 crore fraud in the financial statements. I'm telling you the actual number. There was a 7,000 crore fraud. So what opinion auditor expressed? True and fair. And what was the reality? There was a 7,000 crore fraud. Did the opinion of the auditor go wrong? Did the opinion of the auditor go wrong? Yes, that is audit risk. The risk that the auditor expresses an inappropriate audit opinion, this true and fair view is an inappropriate audit opinion. When the financial statements are materially misstated. And in my example, how much is the misstatement? 7,000 crore. Right? So, inappropriate audit opinion when the financial statements are materially misstated. For many students, it happens every May, November. You understand now? Every time they write the exam, they say, this time pakka, I will clear. You understand? No, this time you say pakka. You know, the day you write your last paper, 16th of May or 16th of November, generally that's the day. Okay, or group, depending upon the group. You say, this time I will certainly clear. And what happens on 16th of Jan or 16th of July? Inappropriate opinion. Right? It's always an inappropriate opinion. Okay, it's like you have to keep this ground reality in mind whenever you feel demotivated or whenever you keep on getting distracted. Yes, I have seen students, you know, who will come for a revision class, still they will not lose their, reputation which they have created of always not paying attention in the class. They will continue to have their own attitude. You show all your attitude to me on the day of result. I will take all your attitude that day, but not right now. And that right now you be full of sincerity and dedication towards the subject. That is the ingredient required for a CA student. Attitude, let it come on the day of result. That day I'll entertain. Right? No, now it's not your turn. तुम्हारा number आएगा, पर उसके लिए तुम्हें मेहनत करना पड़ेगा. You understand? No, there is a lot of difference between being a professional and a student. So you have sincerity, have that, the thirst. ना ये सब बोलने की बातें नहीं है. ये जो बोलते हैं ना, कि there are the students who are very dedicated. If you listen to the interviews of the rankers, no, recent past who got the rankers, what is so special about them? The dedication. And they are not into any outside or always finding out remarks or looking into which teacher, what to do. They're concerned about their own welfare first. Okay, right. So audit risk. The risk that the auditor expresses an inappropriate audit opinion when the financial statements are materially misstated. Auditor said true and fair, but they were not true and fair. That is audit risk. Okay. Now, did I just tell you about reasonable assurance? Reasonable assurance that financial statements are free from material misstatement. And reasonable assurance is a high level of assurance, but not an absolute assurance. Say as an example, let me tell you it's 97%. Just example. Anything which is less than 100%. High level of assurance, but not an absolute assurance. So that means, what am I telling you? That 97% these financial statements are free from material misstatements. Means what am I telling you? 97% reasonable assurance that financial statements are free from material misstatement. Means what? 97% I am giving you an assurance that these financial statements are free from material misstatement. Means on the other hand, what am I also telling you? That 3% there are chances that they may not be free from material misstatement. Exactly. Right. So 3% is the chance that your opinion may go wrong. Right. And that is obviously the audit risk. And you please understand that audit risk is not 3%. It is to be reduced to 3%. Audit risk is, if you say, oh, risk is only 3%, so it's obviously less procedure. No, risk is not 3. You have to keep it reduced. You have to reduce it to a level of 3%. You always read the procedures. What does it say? Reduce audit risk to an acceptably low level. Reduce audit risk. If you've read that sentence in your essay 200, reduce audit risk to an acceptably low level. So reduce audit risk to an acceptably low level, say 3%. Why? So that I can give a 97% assurance. If I cannot reduce audit risk to 3%, say I can reduce it only up to 5%, then obviously my reasonable assurance will be only 95%. That is the balancing figure. Okay, and now see over here. The more, the higher the reasonable assurance the auditor wants to give, the more he will have to reduce the audit risk. And obviously, the more you have to reduce the audit risk, the more the sufficient, appropriate audit evidence to be obtained by the auditor. And this is so logical, you know. Obviously, the more the sufficient, appropriate audit evidence obtained, the higher the reasonable assurance which can be given by the auditor. And obviously, the more the evidence I obtain, the more my audit risk will reduce. Do you understand this? Okay, right. I'll just show you this one particular sentence. Right, read this sentence. To obtain a reasonable assurance, the auditor shall obtain sufficient appropriate audit evidence to reduce audit risk to an acceptably low level and thereby enable the auditor to draw reasonable conclusions on which to base the auditor's opinion. So to obtain reasonable assurance, the auditor shall obtain more sufficient appropriate audit evidence to reduce audit risk to an acceptably low level. Is this clear to everyone? Okay, right? So what is audit risk? The risk that the auditor expresses an inappropriate audit opinion when the financial statements are materially misstated. Okay. And now this audit risk has been further divided under two. It says audit risk is the function of risk of material misstatement and detection risk. Audit risk is the function of risk of material misstatement and detection risk. Risk of material misstatement, that is what? Possibility of material misstatement. See, when I go for doing the financial statement audit, client is going to give me a set of financial statements and they are going to tell auditor express an opinion. Then when you go for an audit, they give you financial statements and you have to express an opinion on those financial statements. When you go for the audit and they give you a set of financial statements, behind that, do they give you a list of frauds and errors during the year? Do they give you a list? Okay, this is the list of fraud and error. Life would be so easy in that case. What will they always show? Okay, these are financial statements which we have prepared. They are free from material misstatement. There is no fraud and error. Auditor, you issue unmodified opinion. So by themselves, is client going to tell us where there is fraud, where there is error? No, generally they will not tell us. So now, as an auditor, we have to find out whether there is any fraud or error. So now that we don't know where there is fraud or error. So what we do, we start with assessing the risk of material misstatement. We understand the entity and its environment. We obtain knowledge of client's business. From that, we identify the business risk. And from the business risk, those which we think may affect financial statements are risk of material misstatement. I understand my entity. Say it is a company dealing in certain products, fast-moving consumer goods. Right? Knowledge of client's business. Then what business risk I identified? That demand for the company's product has gone down. That nobody is using Pantene shampoo now. Example. So I'm doing the audit of an FMCG company, obtain knowledge of client's business, and now what business risk I've identified? The demand for the company's product has gone down. And now, if I think because of this decrease in the demand of the company's product, there is a possibility that they would have done a fraud in revenue recognition, then that is a risk of material misstatement. Possibility of a material misstatement in the financial statements prior to audit. Is this risk there because I have come for the audit? No, it is already there. Demand has gone down, it has gone down. So as an auditor, RMM we assess. And RMM risk assessment procedures are discussed in SA 315. Do you know the title of SA 315? Identifying and assessing the risk of material misstatement through understanding the entity and its environment. That is what I told you right now, no? Understand entity environment, identify business risk, and from that identify the RMM. You understand? Purchase prices have gone up. Now, not necessarily that every business risk is going to be an RMM. Those which I think may affect the financial statements is going to be an RMM. Right, now, this risk of material misstatement, are you all paying attention? This risk of material misstatement, it could be at the financial statement level or it could be at the assertion level. Right, this risk of material misstatement could be at the financial statement level or it could be at the assertion level. Now, right now, what example I gave you? Revenue. That probably revenue, there might be a fraud. So that is a risk of material misstatement at the assertion level. Why? Because I'm able to pinpoint as to which account balances or classes of transaction or presentation and disclosure could be affected. That is balance sheet, profit and loss or notes. Assertion level. Okay. Now, say example, I say incomplete fixed assets register. Incomplete fixed assets register. Then it is a risk of material misstatement at the assertion level, balance sheet item. But if I say incomplete accounting records, then risk of material misstatement at the financial statement level, because incomplete accounting records. Do you understand? It's a broader term. It's a wider. It's at the risk of material misstatement at the financial statement level. I think CEO of company has done a fraud in purchases. Assertion level. I think CEO of company has done a fraud in the financial statements. Financial statement level. So if you can pinpoint which element of financial information could be affected, then assertion level. Otherwise, financial statement level. Financial statement level is pervasive. Pervasive means overall. The risk is overall. And assertion level, it could be related to balance sheet item, profit and loss account item, or it could be related to the notes. And further, it has been divided under two. It could be an inherent risk or it could be a control risk. Inherent risk. Okay, now revenue can be overstated because there is less demand for the company's product. So this is inherent, that means which is there by default. Inherent, that means which is there by default. Possibility of a misstatement in an account balance, classes of transaction, presentation or disclosure, which could be material, either individually or when aggregated with other misstatement before consideration of controls. Is there any problem in the controls of the organization? Is there any deficiency in the internal control because of which revenue is going wrong? Is there any deficiency or weakness in internal control because of which you think that revenue may go wrong? No, there is no deficiency in internal control. It is inherent. It is there by default. Demand has gone down. And second, you would say that their revenue control, serial number control not there for receipts, copies of receipts not maintained. So that's a deficiency in internal control, weakness in internal control. And now because of the weakness in internal control, there might be a misstatement in revenue, that is control risk. That is control risk because of a deficiency, because of a weakness in internal control. When you think that there might be a material misstatement, that is fraud or error, that is control risk. And not due to control, for reasons other than control, there could be fraud or error, that is inherent risk. You know what's the definition of control risk? Possibility of a misstatement in an account balance, classes of transaction, presentation or disclosure, which could again be material, either individually or when aggregated with other misstatement, which will not be prevented or detected or corrected on a timely basis by the entity's internal control, which will not be PDC. What is PDC? Prevented, detected or corrected on a timely basis by the entity's internal control. So due to a weakness in internal control, if there could be fraud or error, that is control risk. For reason other than control, if there could be fraud or error, that is material misstatement, then that is inherent risk. Material misstatement means what? Material fraud or error? No. Risk of material fraud or error, risk of material misstatement. Do you understand? See, you are directly going to the 10th floor without visiting the first floor. You don't know audit risk, you don't know inherent risk, control risk, and you are studying SA 550, 560. Not possible. That is why right now I am taking basics. I told you, no, that's the reason why I am taking basics right now. Right, so what is audit risk? It is the function of, audit risk is the function of risk of material misstatement and detection risk. Risk of material misstatement we assess. Risk of material misstatement could be at the financial statement level or assertion level. Assertion level further divided under inherent risk or control risk. Right? And many a times the auditor does a combined assessment of inherent and control risk. Right? RMM. Right. So demand has gone down and that is why revenue could be wrong. Then that is inherent risk. Revenue controls are deficient, that is why the revenue could be wrong, that is control risk. Okay, now, how much was audit risk in my example? To be reduced to 3%. Okay, in my example, out of that, RMM say now have assessed it to be 1.7. No fighting, why 1.7? Just any number less than 3. Do you understand? So now how much is detection risk? How much is detection risk? Are you saying it the correct way? Exactly, wonderful. It is to be reduced to 1.3. See, 1.3 is right, but are you saying it the correct way? It is to be reduced to 1.3. Why reduced to? Because RMM, whatever place it had to take, it has already taken. And that is why, it is said detection risk we manage. RMM we assess and detection risk we manage. Now, detection risk, you'll have to keep it to 1.3 so that your audit risk remains at 3 and thereby you can give a 97% reasonable assurance. Do you understand that? Okay. Now, what is detection risk? Right? What is detection risk? Okay. Say you're checking rent expense of the client. Okay. And here in the rent voucher, yes, in the rent voucher of the client, it is written that rent per month is 20,000. Yes, in the voucher of the client, it is written that rent per month is 20,000. That is what is written in the voucher. Now, obviously, how will I substantiate? I would like to obtain a copy of the rent agreement. Okay. And now I am checking the rent agreement and I'm talking to my friend. Yes, first year article is checking rent agreement. And while checking the agreement, that article is also talking Facebook, WhatsApp, Instagram, and also talking with the friend. And he's also checking the voucher. Okay, now what happened in the rent agreement? It was written 2000. Okay, but now this article, he said, oh yes, 2, no, overall, sometimes by mistake it happens, no. He said, yes, rent agreement 20,000, voucher also 20,000, absolutely right, no problem, rent expenditure correctly recorded. Okay, now, was there now the auditor is performing substantive procedures. When you check a rent agreement, you're doing test of detail. That means you're performing the substantive procedures. Why do you perform substantive procedures? To detect a misstatement. Why do you do a detailed checking? Why do you check vouchers? In order to detect a misstatement. And the possibility that you may not detect a misstatement that exists. Now here, did the misstatement exist? Yes. Was it detected? No. So that is detection risk. The procedures performed by the auditor to detect a misstatement may not detect a misstatement that exists is detection risk. Right? The procedures performed by the auditor to reduce audit risk to an acceptably low level and to detect a misstatement may not detect a misstatement that exists. That is detection risk. You understand? So you have to reduce detection risk to an acceptably low level. So you have to manage it. How do you manage it? Mainly by obtaining more and more of sufficient appropriate audit evidence. Right? How do you reduce detection risk? By obtaining more sufficient appropriate audit evidence. If you've understood the concept of detection risk, tell me when detection risk will be high, when partner is doing the checking or when article is doing checking. Yes? When will detection risk be high? When partner is doing checking or when article is doing checking? Obviously, when the article is doing the checking. So when you put more experienced staff on the audit, you reduce detection risk. When you use more work of an expert, you reduce detection risk. When you increase the nature, timing and extent of audit procedures, you reduce detection risk. And that is why they say detection risk we manage. We can always manage it. Right? So ultimately, how do you manage detection risk? By obtaining more sufficient appropriate audit evidence. And say, you are unable to obtain. You perform audit procedures, but still you are unable to obtain sufficient appropriate audit evidence. Then what to do? Then perform alternative procedures to obtain evidence. Still, if you are unable to obtain evidence, qualified or disclaimer. Or second option, withdraw from the engagement. So if you are not able to reduce detection risk to an acceptably low level, what to do? Obtain more sufficient appropriate audit evidence. You are not able to obtain, then qualified or disclaimer, or you may decide to withdraw from the engagement. Right? Qualified or disclaimer, or you may also decide to withdraw from the engagement. Okay, is it clear to everyone? Okay, right. So once again, let us revise what is audit risk. Right? Audit risk is the risk that the auditor expresses an inappropriate audit opinion when the financial statements are materially misstated. Audit risk is the function of risk of material misstatement and detection risk. Risk of material misstatement we assess. Detection risk we manage. Okay. Risk assessing RMM, risk assessment procedures are discussed in SA 315 and managing detection risk. Further audit procedures are discussed in SA 330. Risk of material misstatement could be at the financial statement level or it could be at the assertion level, further divided under inherent risk and control risk. Okay, now pay attention to me further. Okay, so RMM we assess and detection risk we manage. Now, the procedures performed by the auditor to assess RMM are called as the risk assessment procedures. And the procedures performed by the auditor to manage detection risk are called as the further audit procedures. So, these two put together are the audit procedures. So, now if I come to SA 500, audit evidence, in that I have a very important chart, audit procedures to obtain audit evidence. I hope everybody is paying attention. Right? Audit procedures to obtain audit evidence. What are the audit procedures to obtain audit evidence? Risk assessment procedures. Right? You have the risk assessment procedures and the further audit procedures. Why do you perform risk assessment procedures? To assess RMM, and further audit procedures to manage detection risk. So these two put together is audit risk. Oh my God, if I start with audit risk, I reach to audit procedures. If I start with audit procedures, I reach to audit risk. Like this, no? Ulta pulta. Do you understand that? Audit risk, RMM, itna to yaad rakhna hi hai yaar. RMM we assess and detection risk we manage. How do you assess RMM? By performing risk assessment procedures given in SA 315. And how do you manage detection risk? By performing further audit procedures given in SA 330. Right? So now we'll study in detail the chart of audit procedures to obtain audit evidence. The chart of audit procedures to obtain audit evidence. Everybody paying attention? Right? Audit procedures to obtain the audit evidence. Right? Audit procedures. Right? What is audit procedures? Risk assessment procedures and further audit procedures. Do you know that? Risk assessment procedures, SA 315. Further audit procedures, SA 330. Right? Risk assessment procedures, SA 315. Further audit procedures, SA 330. Right. Risk assessment procedures, why do you perform? To assess RMM. Further audit procedures to manage detection risk. Right. Risk assessment procedures are given in SA 315 and further audit procedures are divided under two. What are the two? Tests of control and substantive procedures. Further audit procedures divided under two. What are the two? Tests of controls, TOC, and then you perform the substantive procedures. Pay attention, very important. Right? TOC and substantive procedures. So one, you understand the entity and its environment. That is, you obtain a knowledge of client's business. From that you assess the RMM. Then you do the control testing. You do control testing means what? You can also say that, madam, we are performing the compliance procedures or we are checking the design, implementation and maintenance of internal controls in the organization. You know this term? Design, implementation, maintenance? Right? Design, implementation. So whether a control has been designed and what has been designed, has it been implemented? And has it been implemented for the entire period for which the financial statements are being prepared? So in other words, you can also say that we are checking the operating effectiveness of the controls in the organization. That means you are doing the control testing. Right? And then you know that sentence, okay? The results of TOC help the auditor to determine the nature, timing, and extent of the substantive procedures. The results of TOC help the auditor to determine the nature, timing, and extent of the substantive procedures. Okay? And substantive procedures, 4 types. What are the 4 types? Test of details. Right? Vouching verification. You vouch a transaction, you verify a balance. So vouch or verify. Then substantive analytical procedures. That is calculation of ratios or verification of trends. So ratios and trends. So 1, test of detail. 2nd, substantive analytical procedures. 3rd one, agreeing the financial statements to the underlying records. Agreeing the financial statements to the underlying records. That means what? Financial statement, schedule. Schedule, trial balance. Trial balance, ledger. Ledger, books of prime entry. Books of prime entry, voucher. You know, under Companies Act also, one of the duty of the auditor is to report that whether balance sheet and profit and loss account, are they in agreement with the books of account? That whether the balance sheet and the profit and loss account, are they in agreement with the books of account? So that is what we check, no? Agreeing the financial statements to the underlying records. Otherwise, many company books of account different, financial statements different. Right. And then the 4th one, examining material journal entries. Examining material journal entries. Because lot of entries go into the system through JVs. And opening, closing entry, write-off entry, provision entry, all these entries go into the system through JV. They don't go through any module, no, like purchase modules or sales module. So examining material journal entries. And you might have studied in 240 a concept of MOC, management override of controls. Right? Management override of controls. That means the management are passing bogus, fictitious journal entries into the system. So you need to do the examination of the journal entries. Are they genuine journal entries or are they fictitious, bogus journal entries being passed into the system? Right? So that is also a part of your substantive procedures. So if anybody asks or for us to understand कि audit में exactly होता क्या है, करते क्या हो तुम लोग audit पे जाके, तो हम लोग ये करते हैं. हम लोग पहले जाके risk assessment करते हैं. We understand the entity environment, we assess RMM. Then we do control testing, we check the design, implementation, maintenance of control, we check the operating effectiveness of control. And then after that we start with the substantive checking. That is, we do either test of detail or analytical procedure, then agreeing the financial statements to underlying records and examining material journal entries. Does everybody understand? Okay. Now, we have 7 methods of obtaining audit evidence to perform these procedures. ICAIORR. Right? Inspection, confirmation, analytical procedures, inquiry, observation, recalculation, reperformance. These are the 7 methods. Okay. Now, when I'm performing substantive procedures, I use all the 7. Inspection, confirmation, analytical, inquiry, observation, recalculation, reperformance. I use all the 7 when I'm performing substantive. When I'm doing test of control, okay, I mainly make use of inspection, inquiry, observation, and reperformance. Right? No confirmation, no analytical, no recalculation because I'm doing control testing. So mainly for performing TOC, inspection, inquiry, observation, reperformance. For doing control testing, for doing TOC. And for risk assessment procedures, again if I write ICAIORR, I make use of inspection, analytical procedures, inquiry and observation. No confirmation, no recalculation, no reperformance. That will happen at the further audit procedures. Right? So inspection, analytical, inquiry, observation. Right? For substantive, we use all the 7. You understand? The 7 methods of obtaining audit evidence. ICAIORR. I've just given you a glimpse of where we use what. Do you understand that? Okay. Right? So audit procedures to everybody. Have you understood this? Right? Audit procedures. Let us draw the chart once again. Audit procedures to obtain audit evidence. What does it say? Risk assessment procedures and the further audit procedures. Risk assessment procedures, we assess RMM, SA 315. Further audit procedures, we manage detection risk, SA 330. Further audit procedures, TOC and substantive. Right? Tests of control, design, implementation, maintenance, operating effectiveness of control. And substantive procedures, test of detail, vouching verification. Substantive analytical procedures, ratios and trends. Agreeing the financial statements to the underlying records and examining material journal entries. Do you understand, right? So this is all put together what is audit procedures to obtain audit evidence. Risk assessment, then TOC, then substantive procedures. Okay. Now, when we are performing substantive procedures, there are certain assertions addressed through substantive procedures. There are certain assertions addressed through substantive procedures. Assertions for account balances, classes of transaction. This also they asked November 18, right? Classes of transaction, right? Classes of transaction and also the presentation and disclosure. Account balances, classes of transaction and the presentation and disclosure. Right? When you're checking a balance sheet item or when you're checking a profit and loss account item or when you're checking the notes item. Right. Balance sheet item, you would like to check the ERCV. The existence. Are you all paying attention? The existence, the rights and obligations. The completeness and the valuation and the allocation. Existence, rights and obligation, completeness and the valuation and the allocation. Right? That whether the asset, liability, equity, does it really exist? So balance sheet item, does it exist? Then whether asset is a right and a liability is an obligation of the entity. Completeness always means all. That there are no unrecorded assets or liabilities. Should not happen that the company has 150 bank accounts and only 100 are shown in the books of account. Or the company is having 20 buildings and only 17 buildings have been recorded in the books of account. Right? That there are no unrecorded asset liability, that is completeness. Then valuation, is it carried in the books at the appropriate carrying value? And allocation. Like, if it is debtor, then RDD, bad debts will be the allocation. If it is fixed asset, then depreciation, repairs, insurance, that will be the allocation. You understand? If there is a fixed asset, then certain depreciation, then repairs, then insurance, that is the allocation that comes to the profit and loss account. Right? So, ERCV, existence, rights and obligation, completeness and the valuation and allocation. Then classes of transaction, OCA-CC. You have OCA-CC. Right. Now see, a balance can exist, but can a transaction exist? No, a transaction can occur. So, occurrence. Then completeness, that whether all transactions have been recorded. Now, balance will have a valuation, but transaction will have an accuracy. Then whether it is recorded in the correct accounting period, that is cut off, and whether it is recorded in the correct account, that is classification. That is classification, OCA-CC. Occurrence, completeness, accuracy, cutoff and classification. And the last one, right? And the last one, which is both combined together, notes, disclosure. Disclosure could be of a balance sheet item or it could be of a profit and loss account item. So it is both put together, ORC-VC. Right? ORC-VC. Occurrence, existence, rights and obligation, completeness, valuation and accuracy. Then classification and understandability. Right? So assertions addressed through substantive procedures. ORC is for balance sheet item, ERCV for profit and loss account items, OCA-CC. And for notes item, ORC-VC. Occurrence, existence, rights and obligation, completeness, valuation and accuracy, and the classification and understandability. Right? The assertions addressed through substantive procedures. Right? So this is first the base of SA 200 and 500 put together. But very important for me is to discussion. Do you know audit risk and audit procedures? Audit risk is the function of risk of material misstatement, and audit risk is the function of risk of material misstatement and detection risk. Risk of material misstatement we assess. Detection risk we manage. Risk of material misstatement, financial statement level or assertion level. Further divided under inherent risk and the control risk. And audit procedures, risk assessment procedures, further audit procedures. Risk assessment procedures assess RMM. Further audit procedures manage detection risk. Risk assessment procedures SA 315. Further audit procedures SA 330. Further divided under 2. Tests of control and substantive procedures. TOC, design, implementation, maintenance of control, operating effectiveness, compliance procedures. And substantive procedure, test of detail, vouching verification. Substantive analytical procedures, ratios and trends, agreeing the financial statements to the underlying records, and examining material journal entries. Right, so what exactly you do in an audit? This is exactly what we do in the audit. So if anybody asks that auditor, you go for statutory audit, what do you do in that audit? So this is what we do. Audit procedures to obtain the audit evidence. Okay, right, coming to SA 210, engagement letter. Right, so briefly let us complete SA 210, agreeing the terms of audit engagement. Right, let us come to SA 210, which is regarding agreeing the terms of audit engagement. Right, the engagement letter which is to be issued by the auditor to the client. The engagement letter which is to be issued by the auditor to the client. And first in SA 210, we talk about the preconditions. Or we talk about the premise, or we talk about the assumptions, presumptions on which an audit is conducted. R raised to 10, question awaited to be asked. Preconditions, premise, assumptions on which an audit is conducted. Right? Preconditions for an audit. So we have to go for the audit, no? So we have to issue the engagement letter to the client. Okay, so now it says there are some conditions before you accept the assignment. These are like preconditions. If these conditions are not accepted by the management, we are not going to go for the audit. It's preconditions. So I told you, you are appointed as an auditor under section 139 of the Companies Act, appointment of company auditor. Section 143 talks about the rights and duties of the company auditor. One of the right of the company auditor is to express an opinion on the true and fair view. Third one, section 129 says that financial statements will give true and fair view if they are in compliance with accounting standards and schedule 3. Now, we know that preparation of financial statements is the responsibility of the management. So now I'm asking management, what AFRF are you going to use for preparation of financial statements? They say, auditor, you know, our holding company is in Hong Kong. So, Hong Kong holding company requires Indian subsidiary financial statements for consolidation. And obviously line by line addition, so it has to be as per the same gap. That is why we are going to prepare our financial statements, Indian company financial statements as per Hong Kong gap. Auditor says, oh, you're preparing financial statements as per Hong Kong gap. And now he's telling auditor, what you do now? We're not prepared to, accounting standard schedule 3.1, Hong Kong gap 1. We will prepare one. What you do for that one Hong Kong gap only, you also express an opinion saying true and fair. Now, for Hong Kong gap financial statements under Indian Companies Act, is it possible for the auditor to express an opinion saying true and fair? See, if they say prepared, I know it is possible. But true and fair, is it possible? No. So auditor says, don't talk to me only. You sometimes tell that to your friend, no? You don't talk to me only. Right. Why don't talk to me? Let's not talk further only. Why? Because the acceptability of the AFRF, that is the most important precondition, that whether the AFRF, which is going to be used by the management in the preparation of financial statements, is that acceptable to the auditor. That the AFRF, whether it is acceptable to the auditor, the acceptability of the AFRF. So what auditor says, Hong Kong GAAP, I have to express opinion true and fair, not acceptable, no doing the audit. Management says, okay auditor, we will prepare one more set of financial statements, accounting standard schedule 3. Now can you express an opinion for that? Auditor says yes, no problem. I can express an opinion saying true and fair. So now the AFRF is acceptable. Once the AFRF is acceptable, then there are 5 more preconditions. See, there is no question about talking about the next 5 preconditions if this first one is only not accepted. So what is the first most important precondition? The acceptability of the AFRF. And once the AFRF is acceptable, then auditor says management's responsibility. Right? Preparation and presentation of the financial statements in accordance with the AFRF. Whose responsibility? Management's responsibility. Design, implementation and maintenance of internal financial controls. Nowadays, what is the term used? Internal financial controls with reference to financial statements. Whose responsibility? Again, management's responsibility. So preparation, presentation of financial statements in accordance with AFRF, design, implementation, maintenance of controls, management's responsibility. Then to provide the auditor with all information of which the management is aware, which is relevant for the audit. Any additional information which could be required from management TCWG, and unrestricted access to persons within the entity from whom the auditor considers it necessary to obtain the audit evidence. Unrestricted access, right, to persons from whom the auditor considers it necessary to obtain the audit evidence. Right? What is that? Management's responsibility. What is responsibility number 1? To prepare financial statements in accordance with AFRF. Next one, internal control. Next one, to provide the auditor with all information of which the management is aware. Any additional information which could be required from management TCWG, and unrestricted access to persons. Whose responsibility all these are? The management's responsibility. And auditor says these are my preconditions for the audit. Management, if you accept all these preconditions, then we can come for the audit. Right. Then SA 210 talks about the contents of the engagement letter. Right. SA 210 next talks about the contents of the engagement letter. Right. 210 talks about the contents of the engagement letter, divided under 3 parts. 1, the principal contents of the audit engagement letter. Second one, the additional matters in the audit engagement letter. And third one is the when relevant additional matters to be put in the audit engagement letter. Again, ICAI has 2 styles of asking question. ICAI is supposed to have 2 styles of asking questions in the exam. One quest style which is now very outdated, which is briefly discuss the contents of the audit engagement letter. So briefly discuss the contents of audit engagement letter means all 3 they have asked, wholesale question. Okay, and another style they have of asking question is retail question. You know, that is what are the principal contents of the audit engagement letter. Or when relevant, what are the additional matters to be put in the audit engagement letter? Or what are the additional matters which could be given in the audit engagement letter? You know, at final level, sometimes the case study, its namesake case study, what they will do, make a big story in the beginning. And at the end, they'll ask that one sentence only. That in light of the above, please mention as an auditor, what are the additional matters you may consider putting in the audit engagement letter. Like I can give you one example for this from the MCQ. Okay, now if you look at this MCQ. Okay, Ram and Shyam Company LLP is an audit firm of chartered accountants with Ram and Shyam as the audit partners. The firm has various statutory audit and internal audit engagements which are looked after by Ram and Shyam respectively. In the previous year ended 31st March 2018, one of the audit engagement of the firm was picked up for peer review, and peer reviewer raised various observations regarding the audit documentation. Some of the information regarding audits were missing from the audit file as per the observations of the peer reviewer. Ram and Shyam are in the process of establishing a robust mechanism for audit documentation so that the same is available for a longer duration and would lead to audit efficiencies also in the future year. Ram and Shyam would like to understand the period for which audit documentation should be maintained by them as per these SA 230. Please advise 10,987. 7 years. Okay, Khoda Pahad Nikla Chua. Where they started, one is they are doing stat internal audit, then peer review, serious observations and various observations regarding audit documentation. You start thinking, oh my God, what has happened? You know, what question are they going to ask me ahead? And then they are asking audit documentation, how many years? 7 years. Books of account to be maintained by client, how many years? Books of account to be maintained by client, how many years? 8 years. Engagement documentation to be kept by the auditor for how many years? 7 years. Okay, right. So that is what, you know, but sometimes they make a case study, they'll give full content, and at the end, last one line, they'll ask the question. And sometimes it's a pure case study also. Right. So what am I telling you? There are two styles of question, wholesale and retail. And nowadays, if you look at the fashion, if you look at what is trending, okay, the trend is of retail question. And you know, coincidentally, it is rhyming that when the question is asked in retail, you should know the points in detail. You understand? So whenever you read the headings, don't only read the headings, okay? Study the right-hand side. Read the content also in front of the headings. Okay. Right. So principal contents of engagement letter. That means this has to be written in the engagement letter. 1, the objective and scope of the audit. The objective and scope. Second one, the responsibilities of the auditor, the responsibilities of the management. Responsibilities of the auditor, responsibilities of the management. Then the identification of the AFRF, which is going to be used by the management for the preparation of the financial statements, and the expected form and content of the report. And the expected form and content of the report. Expected form and content. Now, if you look at these 2 points, okay, pay attention. Responsibilities of management and identification of AFRF, these 2 points are nothing but the preconditions. And obviously, that preconditions, so we have to mention in engagement letter, no. So that will obviously come under the principal contents of the audit engagement letter. What is the objective and scope? What are the responsibilities of the auditor? Responsibilities of the management? The identification of the AFRF, and also the expected form and content of the report. Right? And also the expected form and content of the report. Right? Principal contents of engagement letter. Now, I'll give you an idea of one more style in which MCQ questions could come in, MCQs can come in the exam. Okay, when relevant, now I'm coming to the third part. When relevant, yes, the audit engagement letter, when relevant, the audit engagement letter may include additional matters. When relevant, the audit engagement letter may issue additional matters such as, right, the arrangements, right, such as arrangements concerning the involvement of the branch auditors, arrangements concerning the involvement of the predecessor auditor, arrangements concerning the involvement of the auditor's expert, and arrangements concerning the involvement of the cost auditor. Okay, and now after that, there will be A, B, C, D. A will be option 1 and 3. B will be option 1 and 4. C will be option 1, 2 and 3. And D will be option 2, 3 and 4. Okay, this is, I'm just giving you an example of a draft, you know, of how MCQ could be asked in the exam. Now, so when relevant, the audit engagement letter may include additional matters such as I've not written the entire sentence, but arrangements concerning the involvement of branch auditors, arrangements concerning the involvement of the predecessor auditor, the auditor's expert, and also the cost auditors. And then A, B, C, D, and option 1 and 3, 1 and 4, 1, 2 and 3, and 2, 3 and 4. Now, for these type of questions, again you should know in detail now what are the various points which are included in that list. You understand? No, common sense generally does not help. Because one is common sense and another is law. What is given in law, that is, you have to know it as it is. Right? So which is the correct answer in this case? C. Option 1, 2, 3. There is nothing regarding the cost audit. Right? There is nothing regarding the cost audit. But I just want to tell you that now whenever you read any sentences, points anywhere, you should know that this type, they'll give all the points, 1 or 2 points they'll modify, and then they'll make 4 options out of it. Right? Then they will make the 4 options out of it. Do you understand that? Okay. Right? So contents of engagement letter. Right. Then after that, very important limitation on scope, ATF top 10. Right? ATF top 10. Limitation on scope. Limitation on scope. Client, you've started with the audit, 5 days audit going on smoothly. 5th day, in the 6th day, client is coming and telling you, auditor, from tomorrow, no asking information regarding inventory. You started with the audit, you issued engagement letter, they acknowledge engagement letter, sent a copy to the auditor, auditor started with the audit, 5 days, everything coming, going, vouching, ticking, going on. And 6th day, the client is coming to auditor cabin and telling, auditor, from tomorrow, inventory, no. We will not be able to give you information regarding the inventory. So what is that? Limitation on scope imposed after acceptance. No, after you started with the audit. After, had they imposed it before only, we might have decided not to accept only. But here engagement accepted, 5 days audit over, and now 6th day they are telling you as an example. So limitation on scope imposed after acceptance of engagement. Right? What example am I talking about? After limitation on scope imposed. Are you all paying attention? Yes, limitation on scope imposed after acceptance of engagement. So first thing, what are they telling you? Example, pick inventory, don't ask. What will you say? Okay, we'll not ask. They're telling you, don't ask information regarding inventory. Yes, you will ask the reasons to the management. Also understand the circumstances which necessitated the change. Ask reasons. Management, what happened? What is the problem? Let us get evidence regarding inventory. Let us do the checking. Circumstances which necessitated the change. Okay, we are a very good auditor, you know. You request the management to remove the limitation. Request the management to remove the limitation. Now they say, auditor, our inventory is near the border. If you want to go over there, it is danger, threat to your life only. That is why, thinking of your welfare, we are telling you don't go. You want to go? Go. You understand? So now sometimes it's like, you know, actually not possible. Right. So request management to remove limitation, not possible. But still you are a very good auditor. You are performing alternative audit procedures to obtain sufficient appropriate audit evidence. So how are you trying? First you tried telling management remove limitation. Second, you're performing alternative audit procedures to obtain sufficient appropriate audit evidence. In spite of performing the alternative audit procedures, you are still unable to obtain sufficient appropriate audit evidence. So one option you have now is qualified or disclaimer of opinion, and second option is to withdraw from the engagement where withdrawal is legally permissible. Okay, so issue a qualified or a disclaimer of opinion as may be appropriate, or the auditor may decide to withdraw from the engagement. Now, if auditor withdraws from the engagement, withdraw means other word what I can use for withdraw? In English, left, technical. resigned. So that obviously attracts section 140 subsection 2 of the Companies Act, resignation of the company auditor. Within 30 days from the date of resignation, the auditor shall file form ADT 2 with company and ROC, and if it's a government company, then also with CNAG. That is what you also need to write in your answer. Withdraw means what? Resign, no? So resignation of company auditor. What does section 140 subsection 2 say? That if he resigns, then within 30 days from the date of resignation, the auditor shall file form ADT 2 with company and ROC, and in case of a government company also with CNAG, right? What, ADT 3, right? ADT 3, because ADT 1 is for company NVS regarding the appointment, company informing the ROC regarding the appointment of the auditor. ADT 2 is regarding the removal of the auditor before expiry of his term. Removal of the auditor, central government approval required before the expiry of his term. Special resolution and also prior approval of the central government. ADT 3 is for the resignation of the company auditor. Right? And ADT 4 is for duty to report fraud to CG, 143.12, fraud reporting to central government. Right? ADT 4 is regarding the 143.12, duty to report the fraud to CG. Right? So resignation of the company auditor, it says you need to file form ADT 3 with company and ROC, and in case of a government company also with CNAG. Right? So limitation on scope. What do? Ask the reasons to the management. Understand the circumstances which necessitated the change. It may now provide a lower level of assurance. That is, say now you won't be able to give a reasonable assurance. So request management to remove the limitation. Perform alternative audit procedures to obtain the sufficient appropriate audit evidence. Even after performing the alternative procedures, you are unable to obtain the evidence, qualified or disclaimer. Or you may decide to withdraw from the engagement. Okay, this is 140 subsection 2, which is regarding the removal of the company or resignation by the company auditor. You know, you also have one more over there, 140 subsection 5, which is regarding the removal of the auditor by tribunal or CG. Right, this was asked, November 18, old course, new course, both. They asked in both the papers. Removal of auditor by tribunal or CG. So as we are discussing removal, let us discuss this one also. This is ATF. They've asked it once, they will repeat. Right? Removal of auditor. See, that 143.12. What was 143.12? Fraud, no? Fraud reporting. Duty to report the fraud to CG. So that also they continuously kept on asking it 3-4 times. So anything new which comes up, they ask it 3-4 times, and then after that it settles down. So same thing will happen with this one also. They've started asking it, they'll ask it 2-3 times, and then it will settle down. Right? Then it will become occasional. Right. So removal of auditor by tribunal or CG. How does it start with? You have to know the starting point, because there is the problem, no? That somebody tell me the starting, then I'll tell you the rest of the answer. But exam, you have to know it on your own only. Right. So removal of auditor by tribunal or CG. What does it say? The tribunal either suo motu or on an application received from CG or any person concerned is satisfied that the auditor of the company has acted in a fraudulent manner or abated or colluded in any fraud by or in relation to the company or its directors or officers. It may by order direct the company to change its auditors. Yes, tell me once again, the tribunal either suo motu or on an application received from CG or any person concerned is satisfied that the auditor of the company has acted in a fraudulent manner or abated or colluded in any fraud by or in relation to the company or its directors or officers. It may by order direct the company to change its auditors. If the application is received from CG and the tribunal is satisfied that the auditor has acted, abated or colluded, then the order has to be passed by the tribunal within 15 days. And the new auditor will now be appointed by the central government. Why? When the application is received from CG. Then the order has to be passed by the tribunal within 15 days, and the another auditor will now be appointed by the central government. This is when case the application is received from the central government. Okay, then such an auditor against whom the final order has been passed by the tribunal cannot do the audit of any company for a period of 5 years. And shall be liable under section 447. And the liability will be of the firm and every partner of the firm who acted in a fraudulent manner or who abated or colluded. Right? Every partner of the firm who acted or colluded or abated. Okay, very important. You have to know these 5 points. Okay, removal of auditor by tribunal or CG. At least now it's an opportunity. Abhi tak nahi pata tha, jo ho gaya wo ho gaya, but at least now let us know it. What does it say? The tribunal. Now, what is the heading? Removal of auditor by tribunal or CG. So the tribunal either suo moto or on an application received from CG or any person concerned, if it is satisfied that the auditor of the company has acted in a fraudulent manner or abated matlab helped, assisted, or abated or colluded in any fraud by or in relation to the company or its directors or officers, it may by order direct the company to change its auditors. Who can order? The tribunal. Right. Then what does it say? If the application is received from CG and the tribunal is satisfied, then what does it say? The order has to be passed within 15 days, and the another auditor will now be appointed by the central government. Such an auditor against whom the final order has been passed by the tribunal cannot be appointed as an auditor for any company for a period of 5 years and shall be liable under section 447. And the liability shall be of the firm and every partner of the firm who acted, abated or colluded. Right? Who acted, abated or colluded. Removal of auditor by tribunal or CG. Okay. Right, we are discussing SE 210, engagement letter. Right, so what did we study regarding the engagement letter? Preconditions for an audit, contents of engagement letter, limitation on scope. Recurring audit, what does the standard say? For each audit, is the auditor required to send a new engagement letter? The standard says the auditor may decide not to send a new engagement letter for each period. So 2020, first year of audit, 2021, second year of audit. Do you need to send a new engagement letter for each period? No, the standard says the auditor may decide not to send a new engagement letter for each period. But there are circumstances which warrant the auditor to send a new engagement letter for a recurring audit. ATF question. Right? Circumstances which warrant the auditor to send a new engagement letter in case of a recurring audit. Right? So by default, what does the standard say? May decide not to send a new engagement letter. But there are circumstances which warrant the auditor to send a new engagement letter. These circumstances have been divided under 2. 7 changes and 1 misunderstanding. Right? 7 changes and 1 misunderstanding. Right? What does it say? Change in management. Change in ownership. Change in nature and size of the entity's business. Change in AFRF. Right? There is change in management. There is change in ownership. There is change in the nature and size of the entity's business. There is change in the AFRF. There is change in the laws and regulations, legal regulatory requirements. Right? There is a change in the other reporting requirements. A new CARO has come up. Right? Change in other reporting requirement, change in the terms of engagement, or where there is any misunderstanding with the client as to the terms of engagement, where there is any misunderstanding with the client. Right? So circumstances which warrant the auditor to send a new engagement letter in case of a recurring audit. What are those circumstances? 7 changes and 1 misunderstanding. Change in management, change in ownership, change in nature and size, change in AFRF, change in laws and regulations, change in other reporting requirements, or change in the terms of engagement, or where there is any misunderstanding with the client as to the terms of engagement. Right, so that is first SA 210, agreeing the terms of the audit engagement. Okay, now in the 700 series, right, now if you look at the 700 series, how many standards we have in the 700 series? Right, 4 standards: forming an opinion and reporting on financial statements, then communicating key audit matters in the independent auditor's report, right, R raised to 50. New entry, 701, key audit matters. Right? Then after that, emphasis of matter paragraph and other matter, modifications to the opinion in the independent auditor's report, and then emphasis of matter paragraph and the other matter paragraph in the independent auditor's report. Right? So we'll take a short break of 10 minutes and then we will continue.